Per usual, everything else channels for educational purposes only and is not intended as financial advice. It's set up Sunday. Let's take a look at some charts. It should be a momentous week, a thunderous week, a big week. Not a week to be a hero. Probably not a week to do much of anything, to be honest. Just keep some ultra wide bids, stink bids, as we like to say, and let the fireworks commence. ETF flows last week were down slightly, muted. I don't think we're going to see major flows one way or the other till things settle down a little bit. And if we map this out of what could we possibly see, what is the spectrum of things from a risk asset perspective that would be helpful? We haven't quite seen the best or the worst options yet, which would be panic selling, panic buying, key figures resigning. If Lutnick resigns and heads start rolling on the tariff side because the administration is soft admitting that they did something wrong here, then I think the markets would like that. If Bessent resigns and the adult in the room, at least that's what he's perceived as, is gone, then I don't think markets would like that very much. We have seen actually panic buying a little bit. We've seen a lot of dip buying so far from retail, which isn't great. That's probably not what you want to see if we're trying to make a bottom. And then there's a bunch of secondary and tertiary things that happen, but that's months down the line. I'm sure there's plenty of better and worse things we can think of here. But if we're increasing or decreasing tariffs, you can imagine there's a market reaction. If we're getting deals done with countries, which is what everybody is hoping for, then I think this stuff gets better from a price perspective. And we could see legal challenges to the tariffs. That would probably take a while to actually play out, but I'd imagine that goes straight to the Supreme Court. And it's a pretty high profile situation just based on the percent of tariffs we're putting on here. If we see more global retaliatory tariffs, it's probably worse. If we go to war with Iran or some other nonsense, that's probably worse. And the best and the worst thing, it's kind of like a circle, like a continuum, right? The worst stuff leads to the best stuff, which is effectively just more liquidity. If we start to see alphabet soup of new acronyms from the Fed or from Treasury, or we're bailing out somebody, or we're injecting tons of liquidity into the ecosystem, then risk assets probably turn around. Because clearly, from a market's perspective, I'd even go as far as to say a small business perspective. Was small businesses, were they profiled at all to see how they'd get affected here? Because, I know boohoo, who cares? But they certainly aren't going to be happy. And it's hard to build a factory or move a multi-billion-dollar supply chain overnight. So that's going to be an issue going forward. But I would definitely think of some mental events where, okay, now this is like a big deal, right, for the week. Last week, Powell was talking. He seemed unbothered, moisturized in his lane. He seemed to have no issues whatsoever with the current price action. Really, nor should he. So there's no Trump put. There's no Powell put, at least not yet. And we'll see what happens Monday. We'll see what happens throughout the week. But so far, it doesn't look like there's a bottom in sight based on the events you'd want to see. Some resolution or overturning of the nonsense that happened last week. The markets were perfectly happy with the 10% move. The other question is, what does the administration want? What is reality? Do they really want jobs back? Do they really think manufacturing jobs are going to come back? Is that even possible? Or do they want something else? Right? Are they trying to crash the markets to bring the 10-year down to term out the debt? Sure, right? This seems a terrible way to do everything, but here we are. So I'm not here to call some value judgment on what happened. It's just going forward, we have to figure out how to navigate this. This is the cards we are dealt. Again, not the time to be a hero. Just looking at the ETFs based on average cost basis, we're getting close to the average cost basis, which would be somewhere around 71. It'll be interesting to see if we get there, what will the ETF reaction be? Will there be mass panic and mass selling because everybody's at break even? Or is there going to be mass buying, right? What are we going to see down there, if anything, if we get there? But that's the level to watch. 71, 73, that's about support just based on price. And we'd be retracing the entirety of the election move at that point. Friday, Bitcoin certainly had some outperformance that didn't last into today, obviously, with price breaking down pretty significantly early on a Sunday. By the way, it would started breaking down, I don't know, noon Sunday. BTC down 5, alts down 10 or more mostly. We'll take a look at some of the alts. But at least during Friday, I don't know who was buying or why, Don't think it was Sailor. Don't think it was GME. Not sure who it was, but they were defending 82, 83. They don't seem to be here today. We'll see if they come back next week. But just looking at that white line, looking at IBIT relative to the rest of the market on Friday, even gold was down. This is a 5-day outlook, but you can see the divergence here from the end of the week. And BTC was outperforming everything in a 5-day period. So we'll take that as a win. Now, I wouldn't say this is a long-term, sustainable, highly likely outcome, but it's the start of something where people start to say, okay, why is this happening? Do I want more of that? Do I want this as a hedge? We can all say it's an inflation hedge. We can say it's a chaos hedge, but until it happens over and over and over again, and people stop selling it randomly on a Sunday, it's hard for that to be reality. So yes, it held up on Friday, has not held up on Sunday, and the lower the S&P goes, the higher the likelihood that BTC is getting dragged down with it. I also posted this chart, BTC relative to TQQQ, just because the macro talking heads love to say, especially the haters of BTC, they love to say BTC is just the TQQQ. Well, is it? Because we're now at an all-time high relative to the TQQQ, which is triple levered NASDAQ. So to me, it feels a little something more than that. It's a little beyond just a member of the Mag 7 at this point. Now, hey, that may change down the road, but this is a telling chart that was a leading ascending triangle for years and finally broke out. So good to see that. Also, if we compare IBIT relative to the Mag 7 ETF, that is a new all-time high as well. Bitcoin has no owners. It doesn't have to deal with tariffs. It doesn't care about borders. That is very helpful in a vacuum. But when there's a mass risk off event, which we have had or will be continuously having throughout the month, then yeah, it's going to get dragged down. Even gold got dragged down on Friday. This is BTC against the SPY, also relative value stuff. Last time this broke out was the election. Now, I'm not expecting a mass divergence here relative to the SPY, but it's good to see this in the face of back-to-back negative 5% days, which has never happened apparently for the S&P. So somebody was buying somewhere. Less people were selling than buying. That's for sure on the BTC side of things. Looking at BTC alone, this is the multi-year pitchfork. We're still above the midpoint. Certainly don't want to get much lower than, 77. 73 would be problematic, but within the boundaries, in July, August, September, we tested this level. It held. We'll see what happens. Theoretically, we could survive down here, right on the pitchfork. This is a trend channel. The issue with that is the cycle. Is the cycle at risk below 73? I would think so. I would certainly think so. Now, there's a possibility we just have never had a cycle. How crazy is that? How crazy would that be? You want to hear some good bullish hopium? The cycle hasn't even started. Possible. Look, you could say all this was just bull market recovery. Now, I wouldn't bet on that. I wouldn't go 10x long on that, but it's important to have some options here. It's possible that the cycle died when the ETFs launched, and we just don't know yet. And this is all just new. This is going forward, something different than what we've seen. But yes, what we've seen will likely be dead if we're below 73, cycle-wise. Looking at the power law, based on the midpoint of the power law, we never got past the breakout point here at the mid-level. That would be when the euphoria bull market starts. Haven't seen it yet. And you can see where it happened in 2017, where it happened in 2020, where it happened in 2013 even. Have not seen that yet. Doesn't mean we won't ever see it again, but clearly this is different than previous cycles at this point. Thought he'd throw the pi cycle top enjoyer as a bone. Pi cycle top hasn't even crossed either. So either this cycle is very different than every other cycle that we've ever had, or we haven't seen a top yet. That's for you to decide, obviously. If we look at all these indicators from CoinGlass, the sell at the top indicators, none of them that have classically been the top have been hit yet. So it would be very interesting, not impossible, obviously, if this was a cycle top. If this is a cycle top, by the way, we can think about it this way. From high to new all-time high typically takes 1,000 days. So about 500 days in from the current all-time high, we may see a bottom. I think that would be June 2026, right? That is a lifetime away from April 6, 2025. So I certainly wouldn't be in a rush to max DCA some stack right now. It's a good time to nibble and to just do something else, but certainly not play any of this on leverage. Another reason the cycle might be in trouble if we get below the weekly Kijun here, this red line, that would also be probably a death knell for the quote unquote cycle. We don't want to live below the Kijun above the cloud. This is a massive gap that is very difficult on a high time frame to trade because yes, it is bullish, but it is below anything you'd want to be supporting. So it's possible we drop below, we recross bullish, but this is most likely stuff would be not fun swirling around down there. On the daily, most of the volume support is below us still. That's good. You know, there's something there, right? From 60 to 70. Most of the support is at 68 probably. Not much here. It grows past 74. But good things happen above the cloud, bad things happen below. This is where we are. No one should be surprised. If you were on your deserted island and you were looking at the cloud, and that's all you had once a day, a plane flew by, gave you the price. You had to draw it on sand using coconuts. They refused to help you. You don't know why. But if this is all you had, the moment we start closing below the cloud, expect bad things to happen. If you're bullish, right? You know, if you're bearish, this is what you want to see. So we won't truly be bullish again until we're back above the cloud like we were into Q4 last year. Everything is bearish here. The head and shoulders idea, the inverted head and shoulders idea, I'm not going to say it's completely dead, but it's getting increasingly less likely, right? It's possible that this could repair itself and that when we're living in the right shoulder right now and we get back to, I don't know, 85, 86, that's possible. It's just not as likely. And it never really triggered anyway. You wanted a daily close above 88. You never really got that. So here we are below the Tenkan on the daily. And if anything, this channel and cloud combo on like the 8 hour, the 6 hour, 4 hour is still all bearish. We're at the midpoint of the bearish pitchfork here. It's just a channel. That's all it is. Hard to really celebrate anything until we're back above at least this on low time frames. So currently that would be 84-ish. You'd probably want 86. If we're above 86 this week, we can all celebrate. We can get out the champagne. But until then, the likelihood of down has to be higher than up just because the expectation for Monday to be a bloodbath on Legacy Land is probably very, very high. Looking at the leveraged BTC stuff, this is closed obviously for the week end and it is not opened yet. But this will have a mega down day because it's missing effectively a 10% down move so far. I wouldn't count this out though. One thing I'm really bad at is saying, okay, this didn't work, move on, next chart, right? I think it's important to stay with this stuff and watch it through its life cycle and see, okay, this looked like it was there, never really triggered, certainly didn't get a bullish TK crosser in the cloud, but this could have a chance, again, if things start to bounce, if we start to see some of the stuff on our list where we're backing off the ledge a little bit and not continuously trying to jump into the abyss, then BTC is a chance to do better. MSTR is another one. Where could this go this week? We could see 200 again, right? Like that's possible if we get a COVID style down move on the S&P, which, hey, why not? Why not? Things look quite apocalyptic on those charts, which I'll get to in a second. And something else to watch for in all these leverage ETFs is whether or not they blow up. MSTR, I think collectively, if any of them have like a negative 51% day, I think that's a catastrophic insolvency, or effectively it cannot rebalance back to any connection or semblance with price. Some of these ETFs, leverage ETFs, had a really bad day Friday. They were down almost 20% or more, some of them. But again, this is something to watch, especially for MSTR, leveraged MSTR, which has a history of crazy moves in both directions. Looking at alts, starting with XRP, to probably, hopefully, no one's surprised, this head and shoulders variant mess, Frankenstein's monster, continues to break down below the cloud here, below $2, below VPVR support, below the range. It would not shock me at all if we see everything puking and Ripple is sub 150 this week. Would not shock me at all. It's held up better than most alts, but at some point, sellers will take over here just like they've taken over most alt charts. This is ETH on the weekly. Only support left here is basically 1200, 1300 on VPVR. The measured move of if this was a double top would be something down here. We lost the weekly a couple weeks ago, lost the daily a couple weeks ago as well. So again, it should be no surprise. You know, we were talking about a inverted head and shoulders on a macro level going into 2025. Never got that, never triggered. Went into the cloud, bearish TK cross below the cloud. All those are stepping stones and warning signs on the way down. Just didn't see it. Didn't see any bullishness on ETH, and here we are. Certainly doesn't look like a bottom. No reason to be a hero. ETH BTC continues its parabolic puke quicker, accelerated, hastening. Is this a bottom? I wouldn't bet on it. Last time we were down here, it took 2-3 years to bottom. We had the Fed on our side. We had liquidity on our side. Currently, you have neither. And it's just another alt. There's a world where this just falls down the market cap table. Below Tether, below whatever else. Certainly possible. Ain't nobody home on the ETH side of things. Sol, wouldn't surprise me if we see this in the 90s this week if things continue to deteriorate. Support on VPVR down there at 96, looks like. Certainly oversold. Definitely been bearish since it broke down all the way up here in February. And it's just been good night ever since. You want to see this at least start to close and hold the Tenkin, the blue line. Not seeing that at all. Something else I'll mention on the BTC Daily Cloud. We do have the beginnings of a flat Kumo equals magnet situation, somewhere around 92, 93. So if we can bottom, if we can hold this, if, then I like 92, 93. The longer this goes on, the higher the likelihood that we mean revert to that level. But we have to start holding some lows first, which we haven't really done yet. And the same is to be said on any of these charts. Sol, there's a level up there at 205, but that is light years away until we start holding these lows. If we break down to 90, then you want to see some liquidations and some panic. Even on the ETH side, we could see some maker vaults start blowing up again at 1600 or lower. And then the party starts, right? Then things really start to unravel. So far, it's been a controlled burn. Sol BTC also below the weekly. We're talking about cup and handle going into 2025. Didn't see it ever break out. Didn't see it hold these levels and close in the cloud. You got your answer. So this is in full bear territory. Probably needs, if I had to guess, at least a year and a half before we start talking about anything bullish on Sol BTC. The weekly edge to edge mean reversion thing, that wasn't even bullish. Like, this truly hasn't been bullish against BTC recently. Now you could say it was back here, sure, but over here it was just mean reverting, realistically. So it's certainly in bear territory. All right, for the legacy stuff. VIX, it was up 50% on Friday. I don't think that's normal. I could be wrong. Again, amazing BTC held what it held with VIX up here, but clearly BTC breaking down. DXY has reached its head and shoulders measured move. You would think crypto would love this. Global liquidity certainly loves this, but obviously there's bigger fish to fry with tariffs and uncertainty on that front. DXY is also below its weekly cloud for the first time since Q3, Q4 last year. If this can continue to maintain weakness below 102, below 100, eventually at some point BTC should start to catch a bid on that. So far we haven't seen too much of that. Oil's breaking a multi-year support level. If this is breaking down on global slowdown, global recession fears, fine. But to see oil break this, not great. Again, bad things happen below the cloud. This has been below the cloud since early 2022. Sorry, mid 2022, below the cloud. Just struggled to get anything on the weekly. So from the inflation perspective, great. From energy producing perspective, not so great, right? And if we look at gold, I continue to think this is not a place to add to gold. Sell if you want to sell, fine, but hasn't quite rolled over completely, but it just seems a little silly. You know, where were you back here in 21, 22, 23? I think Costco started offering gold bars July 23, something like that. So even Costco was on the gold train way before the breakout. Who knows what gold does this week, but certainly looks closer to an interim top than a bottom to me. SPY monthly cloud. There's a monthly Kijun level at 480. Again, if we break 480 and we're swimming between 350 and 480 in this nonsense, not great. Not great. This was COVID. We bounced, V-bottomed thanks to the liquidity injection. This was 2022. We bounced at the Kijun So to lose this and just swim around here, not where we want to be, in BTC likely to do the same. SPY weekly, bearish TK across this week, almost guaranteed, into the cloud. Just one of the ugliest weeks for the SPY, probably for anyone that's alive that they've ever seen. Quite bearish to say the least. Daily has been below the cloud for a month. You're not going to see this happen above the cloud. You really aren't. This is bear territory stuff. So I hate to be a broken record, but yeah, we're below the cloud. Bad things happen below the cloud. Some sector stuff, XLK, tech, below the cloud. Does this look like a bottom to you? If it does, then I need to take some lessons, because give it some time. Give it a couple days, give it a week. Here's TQQQ. I was talking about a trade up here in February. I stopped myself out at somewhere around 81, I think the level was. We're now down 50% from the stop loss. So hey, stop losses work, especially on leveraged products. And this is another one that if the Qs continue to melt down, we may see some products blowing up. So stay tuned for that one. But clearly no bullishness here whatsoever. NVDL is another one, leveraged NVIDIA. Huge puke. Part of the move on the way up and now on the way down for these equities was fueled by leveraged products like this, and including MSTR. And so there was a lot of US dollars and flow coming in and out of this stuff that's pushing the spot price effectively. So it's kind of like the tail wagging the dog. But if this continues to puke, I would definitely be watching the flows and see what's going on there. This is XLF financials. There's head and shoulders all over those charts. Breaking down on the daily, once again, below the cloud. This is one of the reasons why in my amygdala that is permanently burned in, anytime I see this, I'm not bullish. I can't be bullish until it resolves. This is the risk, right? This is always the risk that you lose a neckline and that's it. So this is like Ripple before it broke down. It may not break down, but if it breaks down and I'm long, I say, what the heck am I doing? Clearly, you shouldn't have been long, right? Clearly, you shouldn't have been long XLF if you know anything about chart patterns here. XLE's been a mess because oil's down significantly. Oil's probably down more this week. XLE's probably down more this week, so there's not even a safe haven there. XLU, utilities down big. I think, what is that, like a 17% candle on Friday? Ugly stuff, ugly stuff. The only thing that really looks good are treasuries. Medium, long. This is the 10-year, 7 to 10-year IEF, SHY, TLT, AG. All these look fine. This is inverted head and shoulders down here, price above the cloud, multi-year bottoming process. Maybe now's the time. Maybe now's the time. This is TYD, leveraged 10-year. We talked about this one last week. Pretty big breakout on that. So what do we want to see this week? Some finality on anything. This half measure stuff is not what we want. We don't want more uncertainty. If they say, these are the tariffs and they're sticking and that's that, and we're not negotiating, fine. Then we go lower. Simple. But I don't think it's the time to do much of anything until things get significantly worse, or you start to see some alphabet soup stuff get carted out in some special programs for liquidity. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.